This past week has been nothing short of a rollercoaster for NIO stock. For investors who've been following closely, you'll know exactly what I mean. We watched the stock flirt with that key $5 level, a mark that has become both a psychological and technical battleground. We saw a dip early in the week, we saw a strong bounce into Friday, and as we close the week, one question looms large: can NIO finally break through the $5 barrier and hold it? Now, the $5 level is more than just a round number on the chart. For traders and long-term holders alike, it carries symbolic weight. Breaking it would signal a shift in momentum, a sign that buyers are ready to take back control from the short side. But repeatedly failing at $5, as we've seen in recent weeks, raises doubts. So today, I want to take you through the significance of that level, the forces behind this week's volatility, and why, despite the setbacks, I think the case for a breakout is building. Let's start with the trading action. Early in the week, NIO looked set to push above $5, riding a mix of improving sentiment in Chinese equities and optimism surrounding the Onvo L90. But just as hope was building, sellers stepped in, and we saw a sharp pullback midweek. That dip rattled some investors, no doubt, especially those watching for confirmation that the stock had finally turned a corner. But then came Friday. NIO rallied hard, finishing the week up 8% and closing at $4.81, reclaiming a chunk of the ground lost earlier. And while it didn't crack $5, the move was encouraging. It showed resilience. It showed that buyers aren't done. And it sets the stage for what could be a pivotal week ahead. So why is $5 so important? First, let's look at the technical side. For weeks now, $5 has acted as both resistance and a psychological ceiling. When stocks trade around round numbers, particularly something like $5, they attract outsized attention from retail traders and institutions alike. There's something about those simple, whole numbers that carry extra meaning. They become battlegrounds. And if NIO can break through and sustain above $5, it would trigger technical buying, stop-loss unwinds from shorts, and renewed optimism from retail investors who see it as a sign the worst may be over. But beyond the technicals, there's a confidence factor here. For a company like NIO, which has been battered by years of volatility, sustained trading above $5 would mark a turning point in perception. It would show that the company has enough catalysts and enough investor backing to climb out of penny stock territory and start reclaiming legitimacy in the eyes of the market. Now, what could drive that breakout? Well, let's start with the Onvo L90. This is NIO's mass market entry under its new brand, and analysts, including those at Morgan Stanley, have noted its strong pre-sale momentum. If those pre-orders translate into meaningful deliveries, it could be the single biggest catalyst to shift sentiment in the near term. Remember, one of NIO's biggest challenges has been scaling to reach profitability. A hit product in the mass market SUV space changes that equation. There's also the short interest angle. NIO remains heavily shorted, and when stocks trade near technical levels like $5, it creates conditions where even a modest piece of good news, maybe an upbeat delivery update, maybe another positive analyst note, can spark a short covering rally. And with volume picking up into Friday's close, we may be seeing the early signs of that pressure building. Now, let's talk about the macro backdrop. Chinese equities as a whole have been on the defensive for much of this year, weighed down by concerns over the property market and questions about government stimulus. But just this week, Beijing reaffirmed its support for EV adoption, hinting at possible additional subsidies and favorable credit conditions for buyers. For companies like NIO, that matters. Tailwinds from policy can translate directly into stronger demand. Meanwhile, in the US, the Federal Reserve continues to walk its line between inflation management and rate cuts. Why does that matter for NIO? Because liquidity conditions impact sentiment toward growth and EV stocks. If the Fed moves closer to easing later this year, the flow of capital into high-growth names could accelerate. And NIO, with its beaten-down valuation, stands to benefit. Of course, there are risks. We've seen how quickly momentum can fade when shorts press their advantage or when macro headlines sour sentiment toward China. And that's why $5 is such a critical level. It's not just about a one-day rally. It's about proving sustainability. Investors will want to see NIO hold above $5 for multiple sessions, ideally on strong volume, before declaring a true breakout. But here's where I come back to a measured optimism. If you zoom out, NIO has laid important groundwork. The Onvo launch shows they're not just tinkering at the edges, they're expanding their addressable market in a meaningful way. Their battery swapping infrastructure remains unmatched in China. And despite headwinds, delivery volumes have remained relatively stable compared to some peers. Combine that with renewed attention from analysts and policy support, and you start to see the pieces of a bullish case forming. So what should investors watch for next week? Number 1. Price action around $5. If NIO makes another run at it early in the week, the question will be whether buyers have the conviction to push through. Number 2. Any updates on Onvo pre-orders or upcoming deliveries? Momentum there could be the trigger. And number 3. Macro headlines, particularly from China, which could either bolster or undermine sentiment toward the sector. To sum it up, this week reminded us why NIO is such a fascinating stock. It's volatile, it's polarizing, but it's also at the heart of one of the most dynamic industries in the world. And as we head into next week, the $5 level will once again be the line in the sand. Break it, and we may be looking at a new chapter for the stock. Fail again, and the waiting game continues. But if you ask me, the resilience shown on Friday, combined with the bigger picture of product launches, policy support, and the possibility of short covering, suggests the odds are shifting. It won't be easy. It won't be straight up. But the building blocks for a breakout are there. And that's what makes the story of NIO right now so compelling. So the question remains, is this finally the moment NIO breaks through $5 and holds it? That's the story we'll be watching closely next week.